Welcome back to Straight Money Strategies. I'm Robert Bauman, and this course is based on my book, Straight Money Talk. Lesson 8. Manage your mortgage and pay less overall. Owning your own home is a central part of the Australian dream, but it's hard to square home ownership with the basic principles of wealth creation. I've been telling you, for example, to avoid debt and control your spending, but it may not be obvious how to do this if you want to buy a home. So in this lesson, I'm going to show you that you have more control over your mortgage debt and your mortgage spending than you realize. In fact, I'm going to teach you 4 specific strategies you can use to lower your mortgage payments or to pay less overall for your home. The 4 specific strategies are: adjust your repayment frequency, adjust the loan term, make additional repayments, adjust the interest rate. Before I get to the strategies, let's take a look at a typical mortgage. Let's say you borrow $200,000 for the purchase of your home at 10% interest for 20 years. At the end of 20 years, when the mortgage is completely paid off, you will have repaid the bank the original $200,000 plus a staggering $262,720 in interest. More than twice the original principal in all. Wouldn't it be great if you could keep some of that money and invest it for yourself? Well, you can. That's what my 4 strategies are all about. Let's start with strategy number 1. Strategy number 1. Adjust the repayment frequency. To show you how this works, let's use the same example. You borrow $200,000 to buy a home at 10% interest for 20 years. Your mortgage payments are $1,928 per month. If you pay 20 years worth of mortgage payments at $1,928, you will end up giving the bank more than $261,000 in interest. But because of the way most principal and interest loans are structured, you can reduce your interest simply by paying early. A little known way to do this is to break your monthly payment into 2 pieces and pay each half every 2 weeks. For example, instead of paying $1,928 once a month, you can break that payment into 2 pieces and pay $964 fortnightly. If you do it this way, you still pay the amount you owe each month, but you will pay only $201,187 in interest over the course of the loan. That means you will save more than $60,000, which will be yours to save and invest as you wish. Strategy number 2. Adjust the loan term. You typically don't have control over the interest rate you are charged for your mortgage, but you usually have a choice about the repayment period, also called the term of the loan. In our example, the term of the loan was 20 years, but you could have chosen a 15-year mortgage. On a 15-year mortgage, your payments would be only $110 more each month. Yet you would pay approximately $49,000 less in interest over the course of the loan. Many borrowers automatically go for the longer-term loan in an effort to reduce their monthly payments. But as you can see, that's not the best approach. It's usually better to take a mortgage with a shorter term. The monthly payments will be a bit larger, but you'll pay less overall. Strategy number 3. Make additional repayments. As we've already mentioned, most mortgages are structured so that you pay less in overall interest when you pay early. For this reason, it's a good strategy to make extra payments toward your principal whenever you can. For example, if you get an inheritance, a bonus at work, or money from selling an investment, it may make sense to use some of that money to make an extra mortgage repayment. Extra mortgage repayments reduce the principal, and thereby lower the interest you will pay over the course of the loan. Making an extra mortgage repayment makes particularly good sense when the interest rate on your mortgage is high and the interest you can expect to get by investing those funds is low. You come out ahead by paying down the principal on the mortgage. Strategy number 4. Adjust the interest rate. You can't control the interest rate of your home loan, but you can shop around for the best rate prior to signing for the loan. This chart shows that even a small difference, 1%, can make a big difference in how much overall interest you pay. As the example shows, by shopping around and choosing an interest rate of 9% instead of 10%, you will save more than $19,000 over the course of the loan. Another way to save is to use the services of a mortgage broker. Mortgage brokers have information about rates and programs at dozens of lending institutions and can help you find the best deal. They often know of unadvertised mortgage programs, and they can sometimes even negotiate on your behalf to get you lower rates or fees. Just make sure you use a broker who's a member of the Mortgage and Finance Association of Australia, whose members are required to meet high ethical and professional standards. So, here is what you need to remember about getting a mortgage to buy your home. For most people, a mortgage is necessary, but paying extra money to a lending institution is not. You have the power to lower the amount you pay and keep more of it for yourself. Learn to shop for lower interest rates and to ask the right questions before signing for your mortgage. And then once you begin making payments, use smart repayment strategies that allow you to pay less interest and keep more money for yourself. This brings us to the end of Lesson 8. Once again, it's time for you to take action. Click the tab marked Resources above and download the Lesson 8 study guide. Answer the questions and complete the required action steps. Once you've completed the study guide questions and activities, you'll be ready to move on to Lesson 9. In Lesson 9, we'll show you how to teach your children good money management habits so they'll be able to become financially secure as adults. See you in Lesson 9.